Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, March the 3rd, the year's 2020. Let's talk trading. Walmal method, day 2. In fact, I heard from Walmal himself, and he shared his trades out on Crestlick.com. But first, we have to remind everybody that trading is very risky and you can lose all of your money. And these videos are for educational purposes only. So if you're seeking trading advice, financial advice, investment advice, seek it from an accredited financial professional. That way, if you take their advice and lose your money, you know you took the advice of an accredited financial professional rather than somebody with a funny name who posts YouTube videos, or somebody else who's putting something out on the internet or in your email or in your mail or calling you on the phone to get you to buy their stuff. Okay, disclaimer out of the way. Once again, this method is based on range, which is the high minus the low, and he's looking at the pound USD pairs, or pair, I should say. So this is the chart, and just so you know, what we're doing is we're trading between 0800 and 1500, or actually between 1600, because the 1500 is the last chance to get on board. And what we're looking at is to go long at the line or short at the line based on the candle color. So the actual trades from Walmart are right here. So you can see he had a trade one. He said he got in late. So should be a little bit better than that, Walmal. And he got 2.1 pips. And then he got in late a second time. He said it moved so fast, but he picked up 13.2 pips. And then he took a trade 3 and a trade 4 and a trade 5. All 5 trades were positive. We had one nice runner and a couple of smaller ones. Said he gross 21.3, commissions at 3.5. He netted 17.8 pips. So, I mean, if you net 17.8 every day or close to it, you're going to be making some nice pips for the week and for the month. And it looks like he's actually using the little training wheels indicator that I'm working on, but I'm going to need a little more information on that so we can actually use it more of a trade trigger type indicator. But once again, you can see here, let's find the here's the first candle here. So you see here, it already had moved a certain amount. Let's see, where's the open? 78, and the close, no, the open was 81, and the close was in the high. Now, let me see, how do I want to do this? Okay, it opened here, which was 81, so it already had moved 9 pips when it got to this point. So let's take a look at something here. If we go back and we're looking at the high minus low, it's going to be greater than 10, about 89%, greater than 15, 70%. So it's already moved 9 pips. So you see here, you've got a chance maybe to get to 15, maybe to 20. So right here, you could have just taken, you could have bagged those pips. You could have just said, hey, I'm going to take those 5 pips and take them off the table. That was one possibility. And on the other case here, I'm not sure if he's using the daily candle color as a filter, because you can see we opened here and now we're above the daily open. So maybe, just maybe, you might want to just go with that flow, considering the daily range hasn't been hit. So I'll have to get back with Walmal. He can chime in tomorrow and let us know about that. And the other thing is, you can see here, it's definitely above the previous midpoint here. It hit it and reversed. So that was a nice move to the upside. Now the second candle here, you see it was continuing up. Actually, it looks like it probably went to the south first. So if you scratch the south trade because it's above the open, you wouldn't have taken it. You would have said, nope, I'm just not even looking to go short. So here long, and then you see right here, you could have grabbed another 10 pips on that when that candle continued up and then reversed. And so, but obviously he did take a couple of short trades here. He took a couple of short trades here and here. So maybe, and this is actually on, he's looking at the M5 chart. So it's kind of hard to tell which H1 bar he was actually using when he did that. But this looks like the one. So he had a big down. Let's see, maybe I can open it in a new tab. We can zoom in. So right here, his bar time was 13. So we've got a 13, 12, 11, 10, 9. So his first trade was on the 9 bar. So let's see. Except I don't know if his server time and my server time are the exact same. Oh, this is interesting. I think these should be in GMT, but I'm not sure. It could be GMT +1. I'll have to get with them to find out. Anyway, going back to the method, for example, right here, that would have been a nice long, good for about 20 pips. Here, once again, that would have been over 10. Here, maybe a fiver. Here, over 10 again. Here, that was worth 10, 20, 30, 40, up to 50 pips. Here, looks like 5. Here, looks like 10. So, that being said, definitely it's solid, because once again, when you look at the frequency distribution on the pound over the last 100 bars, you can see greater than 10, 89% of the time, and greater than 15, 70%. So obviously, if you can shoot somewhere between 10 and 15 and pick that up, that's going to be a very nice trade. You can look here at my template that I set up. And so for here, you see price moved up to a high, then it came out of that this rat zone on the H1 bar, not a D1 rat zone, but an H1. I'm setting it at 5 pips. And then see here, it hit right here, and it'd be worth, been a 10 pip trade. And I know people could say, oh, that's hairy hindsight. But the fact of the matter is, we've got the statistics, and all you have to do is take the trade, put your stop loss on, based on your risk, so you don't lose any more on a trade. than you want to lose. And you can see here how many times it would have paid off. I mean, the thing is, it's very, very, very simple. And so what's really interesting right here, you can see we were at the 25 line. And for those of you wondering how the heck I did that, if you've got the latest version of the sweet spots, which I think I may have to re-upload, it gives you the opportunity to give an indicator tag. So default is 0. And then when you put in a second version, you just increment it by 1. And that way the second one won't wipe out the first one. It won't clear out those objects because they'll have different object names. So that's how I get the 25, the 75, and the 50, and the 00 already in there. But as you can see, it's not what you would call exciting in the sense that, some methods require you to do a lot as a trader, giving the illusion that somehow by you doing all this stuff, it's going to influence the outcome of the trade, where no, he's already done his homework. He's studied the price movement of the pound. He's frequency distributions. And he says he checks these, basically once a month. Now, there was something I was thinking about, and we're looking at H1 bars, and I was thinking, I think when I had this up before, I had it so, I think it was like 120. I was looking at a whole week's worth of H1 bars, but then I got to thinking, this is more of a day trading, scalping type of system. So we should really just maybe check the last 4 bars to get the average to see what price is doing in the moment. So like right here, when you've got 4 small bars in a row, this average is going to be smaller. And what that might even do is alert you, hey, we could have a big explosion out of this range. And lo and behold, it exploded for 30 pips. So if you look at this range here, these 4 bars, it would have told you have one. Well, the range, let's see, we've got about a 10, 20, 30, maybe another 20, maybe another 20. So it would have been right around the 20 something. So in fact, if you used a regular squiggly line average range indicator or histogram, it would have showed you that at the bottom if you would have set the average to 4. But I'm thinking it might be smarter to do that. Or you can maybe do, because plus 4, if you think about it, we basically have 3 8-hour sessions. We got the London session, the New York, and the Asian session, though they don't line up one after the other. There's overlap. But you can think of it looking at the whole session too. Now, I just thought of something you might want to do, and I might have to make a change to the range gauge. Nope, I don't have it. You might want to have a couple of ranges available just to see what that range is. Oh, of course, we could do it on the dashboard, and you could maybe get a better idea rather than just eyeballing it. You could get it down to the pips, what the movement of that pair is. And so he's picked a pretty active pair, solid pair, pound dollar, lots of people trade it. Right now on my platform, you can see we've got a spread under 2, so it's pretty much tradable pair. And obviously, even though he likes to stop at right here, you see these 2 vertical lines. This is the this should be the 8, and this should be the 15. Oh, actually, it's 16. So you don't trade this bar, you trade this bar. So from here to here. So he normally wouldn't trade these bars, but I would because I trade the New York session. I don't feel like staying up late. I'm on the or getting up that early. I'm on the West Coast. I believe he's on the East Coast. So that's the method. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So I hope you're enjoying the Walmal method. and I hope you can use it to drain the banks.